Hello and welcome to another daily market update by Market Intel. Today we want to take a look at the HBAR chart. HBAR has recovered quite a bit in recent weeks and we had a nice rally from the April lows. Now we see a bit of a correction, but yeah, we need to understand, is this the start of a larger recovery? Could we go to new all-time highs from here? Let's take a look at the chart. Let's go. Okay, we are on our website dailymarketupdate.com. If you're interested in all of these or in any of these updates, then you can register on our website completely for free. Just follow the link in the video description. Today we want to take a look at the crypto section and we select the HBAR chart. And we start with a bigger picture. Yeah, we want to start with a larger time frame. And I think it's just important to clear up some things here, talk about the levels and the structures that are on the chart. I believe there's a little bit more information now on the chart compared to last time. So it is important to understand that at the moment the magenta scenario is preferred. So the idea is that here on the larger time frame, we are likely in this third wave to the upside that should overall take us to $1.21 plus. There is this 72-cent level in between here. This needs to be broken in order to reduce the likelihood of this blue scenario further, because in this blue scenario where we're tracking a larger correction, an ABC structure, we could technically go all the way up to that green level there, the green line, because B waves can overshoot. So in the blue scenario, this would be a high B wave, right? But any break above this Fib level, or it is actually a Fibonacci level in the background, but this 72-cent level, any break above would be too high to be considered blue wave B. So it would be something more directly bullish. And that is actually what is preferred as well. So this would take us to $1.21 plus. Standard targets here, Fibonacci targets for such a third wave, but it's more a long-term thing. It's more long-term. In the short term, the overall idea is we should go higher, and we're going to take a look at that in a smaller time frame. But please note, there is a risk that the rally is only a B wave. We brought that onto the chart, but it's only an alternative scenario. Now, if the rally is a B wave, it would be considered a B wave as part of an extended wave 2. At the moment, the thesis is that this wave 2 correction, which started a while ago after this wave 1 high, this wave 2 correction finished, and we're now in the third wave. But obviously we need to have, just for risk management purposes anyway, a short-term bearish scenario. But even then, in the very short term, we should push higher. Now, looking at the shorter time frame, you can see that potentially in April, and I think it was around the 7th of April, many cryptos started a rally from there. That from this swing low, the market has started a wave 1, and that would be a wave 1 of an even larger degree, third wave. We need to get it above 40 cents. That would be further confirmation that we're actually in a breakout. Until then, you could see this here as a range, and it's possible this wave 2 is actually bottomed. We're now in the third wave, and in this scenario, in this scenario, it's important that the market keeps going, because what we want to see is the development of a 5-wave move, as shown here in blue, of beige wave 1. It's important to note that if we fail here, and the market comes down, then this would just simply be seen as a reset of that wave 2 correction, just as a reset. So it could still be unfolding, no invalidation, but if we break below that April low, it would be potentially problematic. Yes, we could then still see this as a wave 2, but the entire correction would become much more complex. So best approach would be, or the best case here would be, for the chart to keep going, move higher in this blue third wave, form another higher low and a higher high. That's currently the preferred interpretation. Then eventually break above 40 cents. So it's crucial we stay above the April low to keep that scenario alive. The problem I see here is that the move to the upside from that low, it's really not impulsive. I mean, the move down looks like a 3-wave move, so we consider it currently as a completed correction, but the move to the upside momentum is just completely different to what we did here before. Okay, it's just weak, kind of not a very steep angle, but that can still happen. I mean, we're printing higher highs, higher lows, but as long as we're staying above that red line, the overall uptrend here can continue. We might be in the early stages of a more significant upside reversal. So obviously we keep an eye on it. Still very fragile at this point, and the Bitcoin chart, for example, is still much stronger than many of the altcoins at the moment. So maybe that will change at some point, and then we all know how quickly things can change in crypto. So it's important to be aware of these relevant levels. Hope it helped. Hope you liked the update. update. If you did, please hit the like button, leave a comment and subscribe. And yeah, if you're interested in additional updates, make sure to register on our website. You can do it completely for free. And also let me know in the comments which other cryptocurrencies you want me to cover in future videos. Thanks a lot. Bye-bye.